Hello and thanks for tuning into this Embark presentation. We're going to be covering off one of the topics around structures today that relates to starting a business. Please be mindful that this is general information. If you have anything specific, please reach out to an accountant. What we're going to be covering off is a quick summary in regards to the structures available to someone in New Zealand, pros and cons of these structures, and then potentially what structure you should be using. So types of structures, we have a sole trader, partnership, company and trust. There are actually a few others, but if you're using these, you're probably already engaging with a professional, so there's no need for us to cover them off. Sole trader, pros and cons. Pro, it's easy to set up, easy and cheap, and therefore it's easy and cheap to wind down. A sole trader is you're using your own IRD number, so you could start today and trade from that IRD number. One of the main cons is there's no limited liability. So basically anything that is in your name is fair game to creditors. The most common one would be your house that you'd want to protect. So if something happens when you're trading in your sole name and your house is in your personal name, therefore creditors can go after it. All profits must be returned in your own name because you're trading in your own name, and quite often you don't seem as professional or big. Partnership is very similar to a sole trader, apart from it's two or more people. So you can share the costs and business load because you've got partners to work with. You can bring more capital investment, and you can still offset the income against other losses, apart from residential rental losses. The big cons, and they're pretty significant, is that each partner is liable for the debt. So therefore, if you've got a partner that does something wrong in the partnership and your personal house is in your name, therefore the creditors can go after your personal house even though it wasn't you that made the error. So that's something significant that you need to cover. Outside of a husband and wife, it would be unusual to have a partnership set up in the current day and age. The other most common one would be that of a company. So big pros of a company is it's a separate entity, therefore you have limited liability. So what that means is the company is completely separate from you as an individual, therefore it's got its own IRD number, it's got its own bank accounts, it's kind of got its own identity. Generally speaking, people deem a company, even if it's just you, to be more professional or larger than that of a sole trader. And it's a lot more flexible if you have multiple people involved. So you can have different incomes, different share splits, different ownerships, different investments. A lot easier to do in a company, certainly than a partnership, and you can't do it in a sole trader. Cons, there's more cost involved to set up and close down. It takes time because it's a separate entity. It doesn't just happen overnight. There are ongoing costs with it being a separate structure. You've got to, there's some administration to be done with the company's office and IRD. It's not huge. It's definitely not as easy as a sole trader. So you need to bear that in mind when you're setting up a company. Trust is similar to a company. It's just a little bit different because it has trustees, beneficiaries, and settlors. It's more used for estate planning. It's there to protect assets for beneficiaries. Basically, you'll be using it as to hold your wealth rather than trading from. It'd be unusual to have a business trading out of a trust. You're more likely to use a company from that point of view. The cons is it's more complex than a sole trader or partnership. I would even argue it's more complex than a company. There is definitely annual administration costs. And even the understanding of what a trust isn't common knowledge for a lot of people, to be perfectly honest. So just a quick summary. So we've got the four options: sole trader, partnership, company and trust. If you're looking at a side hustle or business, it's unlikely you would use a partnership or trust. So therefore we're looking at two options around sole trader or company. Sole trader, best suits a side hustle. We're talking about just doing a small activity in your personal name, therefore there's no reason why you wouldn't do it as a sole trader. When you're talking about actually being a business, you're having employees, there's a little bit more risk in there. Therefore, I'd be going with a company. You can start as a sole trader and transition into a company. That's pretty straightforward. So if you're looking at doing that, that would also be an option. I hope this was helpful, and thanks for tuning in.